Without jinxing it, we may finally be at the start of a potential bull market in the junior mining space. For the second consecutive day this week, we've seen a major transaction announced, in advance of what are expected to be blowout earnings from Newmont. But rather than a gold developer in Latin America, this transaction is centered on the North American market. Of course, we're talking about the buyout of Orogen royalties by Triple Flag Precious Metals. Let's dive in. Triple Flag Precious Metals, a Toronto-based royalty and streaming company, has entered into a definitive agreement to acquire their peer, Orogen Royalties. But rather than expand their portfolio with multiple assets, Triple Flag has their eyes on a single asset within Orogen's portfolio. That's right, they're going through the trouble of acquiring an entire royalty company for one single royalty in the portfolio. A 1% NSR royalty on the expanded Silicon project currently being developed by Anglo Gold Ashanti. The rest of the assets are set to be spun off in what right now is being called Orogen Spinco, which will be led by the exact same management team that runs Orogen right now. And while Triple Flag will have a stake in the revised version of Orogen for current shareholders, this entire transaction basically means that in a convoluted way, you're getting a dividend in exchange for the sale of one of Orogen's assets, while Orogen is also getting a de facto rollback once they get trading again. But we'll expand on that in a minute. First, let's get into the terms. So how much is Triple Flag paying for Orogen? Total consideration is said to amount to a price tag of $421 million, which is based on a mix of cash, shares, and equity in Orogen Spinco. As part of this transaction, Triple Flag has agreed to shell out $171.5 million in cash, $171.5 million in shares, and spin out all the assets that aren't the expanded Silicon royalty, with Orogen Spinco being assigned a valuation of $78 million. Yes, without getting too technical, it implies that the single royalty is worth about $343 million to Triple Flag. Shareholders of Orogen are set to receive compensation equal to about $2 per share, which represents a 38% premium based on the closing prices both of Orogen and Triple Flag on the day prior to the deal being announced. Based on 20-day volume weighted moving averages, that premium is a bit smaller at 32%. That $2 per share is based on shareholders having the ability to receive either $1.63 in the form of cash or in the form of 0.05355 shares of Triple Flag for each share of Orogen they hold, plus 0.25 of a Spinco share, which has an implied value of 37 cents per share. Compensation, of course, is subject to proration, but that's the gist of it. Post-transaction, Orogen shareholders are expected to own about 3% of Triple Flag. The transaction, of course, is subject to shareholder approval, with Triple Flag having already locked up 39.5% of the votes in favor of the deal. If the transaction fails, Orogen will owe Triple Flag $12.5 million in the form of a termination fee, but that's unlikely at this point. The transaction is expected to close sometime in the third quarter of this year. Okay, so clearly this is a lot of effort and headache to go through, all in the name of securing a single asset. So it must be good, right? The expanded Silicon project, wholly owned by Anglo Ashanti, is being billed as North America's largest new gold discovery, with the project having the largest resource for a discovery in the US in over a decade. The latest estimate, released at the end of 2024, outlines that the Merlin deposit has inferred resources of 12.1 million ounces of gold at 1.06 grams per ton, while the Silicon deposit has indicated resources of 3.4 million ounces at 0.87 grams per ton and inferred resources of 0.8 million ounces at 0.7 grams per ton. Exploration at Expanded Silicon to date has totaled 430 kilometers of drilling, which includes 132 kilometers just at Merlin last year. Yes, kilometers, not meters. Both of those deposits are within the 74 square kilometers of claims that the royalty covers. The project is being treated as a Tier 1 project, and this royalty covers all the main bits of it. Plus, there are no caps, step-downs, or buy-down provisions on the royalty, meaning there's a reasonable expectation here that this thing is going to print money for whoever holds it. Current expectations are that the project will be a large oxide deposit that gets processed using heap leaching and milling. with stronger production in the first years of operation. A pre-feasibility study is currently underway and expected to be released in the near term. The project has significance for Triple Flag, considering they also own a 2% NSR royalty on Mother Lode, which is a different deposit owned by Anglo Gold in the Beatty district, although that deposit is several times smaller than Merlin, which is considered to be part of the large expanded Silicon project. Okay, so let's get into Orogen Spinco. As we said, it's the same management team and the same set of assets, minus the expanded Silicon asset. The new Orogen, as a result, will feature the 2% NSR royalty on the Ermitaño deposit, which is part of First Majestic Silver's Santa Elena complex in Mexico, alongside 27 exploration stage royalties and a pipeline of royalties created through exploration partnerships, the latter of which includes 7 option deals, 4 exploration alliances, and 5 available properties. The Spinco is also to benefit from a $10 million investment from Triple Flag, who will own 11% of the resulting entity, alongside a partnership agreement that will see the duo commit to an exploration alliance focused on the western United States. Oh, and the entity will have no debt and $15 to $20 million in working capital. In terms of capital structure, based on a share price of $1.48 per share and shares outstanding of 59 million, the Spinco is expected to have a total valuation of $88 million, which is on a post-Triple Flag investment basis. Which basically means, as we said previously, that the entire transaction amounts to a dividend for shareholders to reflect the sale of the expanded Silicon asset, while shares outstanding get reduced from roughly 202 million to 59 million. And Orogen gets fresh funding and a new major investor to top it off. All right, so let's wrap it up. All things considered, this is basically an asset sale with a few extra steps, but it appears to be a good deal for Orogen shareholders. They get some cash to put in their pocket or some new shares in a larger royalty company in exchange for the sale of a royalty. And for executives, well, they get paid out a bit of cash in the event they are terminated within the next year. But there's actually not any golden parachutes really involved here if they don't get terminated, which is kind of shocking. In any case, it's another positive development for the sector, which is good to see. All right, everybody, thanks for watching. If there's stories you want us to cover, please let us know in the comments section. I gotta say, it's pretty great to see some more big mining transactions happening. You guys know how it works, right? As we see M&A happen where shareholders receive cash, that cash typically ends up in junior names as it moves its way down the I guess we'll call it down the waterfall. So for all these names we're covering, it's only going to be a good sign. And I think that we've got some pretty fun times ahead of us. All right, everybody. Thanks for watching.